Hey guys, welcome to Mortgage Move Mondays. Come on in, come on in. Welcome to Mortgage Move Mondays. I am your loan officer, Natasha Robinson, MLS number 332074. And we are moving some mortgages on this Monday. So gonna give a few people a few minutes to come on in. I see you, Miss Beck. Thanks for joining us today. We
Yes.
are, hey. We are live on Facebook, Instagram, and YouTube. So we will see some of the comments, but some of them we will not. You can always email me if you have any additional questions, but if I see questions, I'll reach out to you as well. And just so you know, the rules of the house is there's no such thing as a bad question. I am here for you guys to answer your question. I was told to go live in 2025, so I want to make sure that we are taking some time to just have a general conversation about getting pre-approved in 2025, right? We want you to be aware. And we have these calls every Monday. I have a Monday call at 6 are only available during the day. My Monday class is more for buyers. It's going to be kind of like on a slower, let's talk a little slower about it so we can answer your questions. On Tuesdays, it's going to be more guideline driven, talking about just things in the industry that you should probably want to know about. Next week, I am going to be discussing all things renovation, FHA 203K, home style renovation, VA renovation, all things renovation, and the grants that come with renovation loans. So you can tune in next week. And every Monday, there will be a different topic. And if you miss a Monday, you can find all the recorded videos on my Facebook page or my YouTube page. And if you are not following me yet on Instagram, I am Loans by and get started. Welcome to Mortgage. Talking about the difference between a pre-approval and a pre-qualification. And like I said, if you guys have questions, it can be an intimate conversation as well. So feel free to drop any questions in the mic. If you're feeling good, you can drop a hello or a thumbs up so that way we can keep you engaged. And we're going to go ahead and get the party started. So what is a pre-qualification, right? A pre-qualification is basically, right, something that I don't do. So a pre-qualification is a lot of times you reach out to your basic lenders, you put in your social security number, they don't ask you for any documents, and they spit you an instant pre-approval, right, or pre-qualification. That pre-qualification means that it's a basic review of income and assets, right? It gives a general idea of what you qualify for, but it's not a commitment for a lender. A pre-qualification is what you see all the time. But because I work in the field that I do, in the areas that I do, I will tell you that I'm going to say 60% of the time, a pre-qualification will not be sufficient enough, and you have a high probability of going under contract and then your deal, what we call dying at the end, because you weren't pre-approved properly, meaning all your documentation wasn't verified. And I'm going to give you a few things that come up in reviews, right? Because I've had a lot of them this week. Welcome to my life as a cover girl model. So if you are someone who has been on your job, right, for 2 years, and sometimes you work 40 hours, sometimes you work 20 hours, you're considered a variable income client. Variable meaning your income is not the same every 15th and 30th or every other Friday. So with that being said, in that particular situation, if you put in a system, you made $5,000 and you had $20,000 in assets, the system is running what you put in the system. But if your income comes back on average, which is what we have to go off of, at 2,800, you may no longer qualify. So I'm not saying that a pre-qualification will always get you to the finish line, but from my experience, there are discoveries that will happen that will make it where that pre-qualification will now turn into a denial. Another big thing is other real estate owned. Some people have properties that are free and clear. Their mom put them on title. There are different guidelines for different things. So when we run those underwriter reports, we do find foreclosures that you went through credit repair and you had it deleted. Well, it still comes up on the underwriter reports. If you had a bankruptcy, or foreclosure, I don't know, I think I just said that. But if you have a bankruptcy or foreclosure, those things can come up in public records still. So definitely keep that in mind. And in addition to that is, just you can have a business, right? During PPP, a lot of people had to report their businesses to get the funds. Well, what happened is you put yourself in the database with the government that told us that you are self-employed. So in that particular situation, we can require tax returns when 9 times out of 10, we don't need tax returns. And those tax returns can have negative things on them that can disqualify you for the loan. So just to know, I know it's nice for you to go online and somebody spit the pre-approval out in 5 minutes. And it's like, oh my God, they're super fast. I generally can get mine done within an hour or two if you give me everything. And we'll let you know what everything is at the end of the PowerPoint. But understand that when you're working with your big banks, if you're getting a pre-approval and you didn't give them any income or assets, it may not be a strong pre-approval. So a good first step is to definitely get a pre-approval, not a pre-qualification. And I don't have it in my slides today, but we actually have a power bid as well, which is one step bigger than a pre-approval. And that means that I sent you to the underwriter that is going to underwrite your file. What I'm doing in this process is I am pre-underwriting you, and my team member is a underwriter, and I know the guidelines. The power bid means I pre-underwrote you and I sent you to the underwriter. So now you know when you find a property, these are the last few conditions. So 2 different steps, but you definitely don't want to be in pre-qualification mode, because as you can see, there's higher level pre-approvals, and the better your pre-approval that you have, the better chance of you getting your offer accepted. Why pre-approval gives buyers a competitive edge, right? You have a strong. So about an hour. Our cutoff date for my underwriter is about 4 o'clock. So if you submit your documentation, which is you complete the application, which we'll show you at the end, it's a soft pull, right? So once we pull your the hard pull, we'll collect your documents. We'll make sure the file works. We'll pull the hard pull if the credit works, and then we're going to be requesting the last 2 years of your W-2s, 30 days of pay stubs, 1 month bank statement. On the bank statements, we want to make sure that there's no insufficient funds and you have sufficient funds. And we're going to be looking at the history of how you're doing your deposits, right? How you're doing all of your things that are going on with your documents, so we can see if there's a problem. On pay stubs, if you're getting child support taken out, or if you have some type of payment that is being taken out of your pay stub, those are things that we're able to see, so we don't have those discoveries later after you've already found your dream home and you've told the world, like, this is mine, and you've claimed it. So when you go under contract, that is when you close. That is not when you start getting a pre-approval. And if you are not self-employed, we don't need anything else. If you are self-employed, we'll need additional conditions. And I think the question was how long it takes. But if you give me all of those items, it takes honestly about an hour or so for us to pull all the reports and issue the pre-approval. And in addition to that, just a little sneak for you guys, because a lot of people don't do this, and I do it all the time. Since COVID, everybody is pretty much on ADP or some type of online payroll system. So basically, if you get bonus, if you get overtime, right? If you have shift differentials and your pay isn't the same 40 hours or salary every pay period, if you give us your 23 and 24 last pay stub, along with 30 days of pay stubs, what that does for me is let me calculate all of your income very fast. So that way I don't have to wait on third-party verifications, which can make your pre-approval take longer. So to answer your question, I could do it in an hour if I have everything I need. And everything I need is 30 days of pay stubs, 1 month bank statement, 22, 23, and 24 W-2s. And if you're hourly and bonus, those last 2 pay stubs of the year will help me be able to calculate your income instantly and issue that pre-approval right away. Any other questions? And thank you, Ms. Emeka. Good question. So you don't have to be on your job for 2 years. I'm going to say it again. You do not have to be on your job for 2 years. That is a myth. You have to have had a job for 2 years in your life, right? And I'm gonna break this down for you guys so you can drop any questions, because I know sometimes I tend to talk fast, because this is something that you need to know and it's very high level. So FHA says if you have not worked, right? I had someone that was incarcerated, right? And then he had worked prior to that happening, had been away for a couple of years. Now he has been back on his job. If you have a full-time job, meaning your salary or you work 40 hours a week, you only have to be on your job for 6 months, but you have to have worked 2 years of your life since you graduated from high school, right? I'll repeat that again. If you have had a major job gap in your job, meaning you were off for more than 6 months at a time, as long as you are back to work for 6 months and you have worked in addition to that 6 months, 2 years in your life, you can use that income. Now, I'll give you some other situations. Say, for instance, you just graduated and you received a degree, right? Now, all I need is an offer letter and a pay stub. Let me say that one more time. One offer letter and one pay stub, or if you didn't get an offer letter, we would order a verification of employment from your employer, and then we just want to make sure it's a full-time position. We're going to get one pay stub to verify that you received the full-time position, but with the degree, you don't need to be on your job that long either. All you need to do is have a job and one pay stub. Now, the question also asks of same line of work. So it depends on the same line of work versus if it's an FHA and a conventional loan. So we have 3 different loan types. We actually have 4 different loan types, right? So we have manufactured homes, we have FHA loans, we have conventional, FHA and VA loans, okay? With that being said, it depends on what type of loan you get. But generally, as long as you have consistent working history, we can pretty much get that loan for you. Now, there are situations where it's case-by-case scenario, like FHA doesn't like more than 3 job changes in a year. But sometimes individuals' jobs require them to change. So my nurses and things like that. So we can do a one-on-one, but to answer your question in a short way, no, you do not have to be on your job for 2 years in order to get a mortgage. Thanks for asking that question. Any more questions, ma'am? Awesome. Keep the questions coming, guys. I love the questions. Number 1, it makes your offer stronger. I will tell you that I am a call the listing agent queen, right? So if you're doing a deal with me and I have your pre-approval, I'm going to call the listing agent. I'm going to tell them why they should choose your bid over the other bids. I'm going to let them know how fast we can close, that we pre-underwrote you, that we verified your income and your assets, and we have a strong game plan, and we can get your clear to close in 2.5 weeks. That gives you competitive edge. You don't have to close in 2.5 weeks, but because you are ready to, that helps you win the bid, and it's free marketing for me, because once I close in 2.5 weeks, I have 2 sellers and 2 buyers, 2 seller agents and 2 buyer agents on that transaction. So they're able to see. And then if I get them again for one of my next clients, they say, yes, Natasha Robinson will come through, so we should go with her, because your lender does matter. If you're offering $150,000 and John is offering $150,000, now the question is, what type of financing do you have? How fast can you close? Who is your lender, right? Now they start asking other questions. So you want to be able to X all of those boxes. Faster closes. Like I said, when you go under contract, you're going to have what's called a home inspection, right? You're going to have a home inspection. And then after you have a home inspection, the next thing is for you to do is basically close. I'm going to need a few more documents from you, like a copy of what's called earnest money, which is required when you purchase a property. It's a deposit on the property. You're going to have to get a quote for your homeowner's insurance. You don't have to pay the insurance, but you're going to have to get that quote, right? And then we're going to order your appraisal. But other than that, there shouldn't be any major discoveries. Things can happen, right? And they do sometimes, but we try to make that only a 10% chance. Our goal is to get you straight through the process. I had my client today say, this is just going too fast. I definitely think that that's better than it going slow and your lender calling you for different items back to back to back, making it a painful process. We can't make every loan a painless process, but we definitely do try to make sure that we are getting our borrowers to the finish line as fast as possible. And like I said, guys, you get in your house faster, and guess what? I get free marketing. So I'm able to show the world that I can get my deals closed fast, on time, and before schedule. And that's just good for everyone, right? Confidence in home shopping. You don't want to go look at a property for $400,000 and then find out after I complete my review, because I didn't get all your information, that you only qualify for $180,000. Because honey child, I would tell you that if you go into a house for 180 and you already fell in love with the house for 350, it's not apples to apples, and you're not going to like the $180,000 house as much as you would like the 350. So with that situation, we want to look at what we know we can afford, so that way we don't stress ourselves out in the buying processes, which goes to my number 4, no last minute financing issues. Last minute financing issues happen all the time. Sometimes there's things that we can't prevent, you know. I had a situation where my client had an error on the lease, right? So it put us through a situation where we had to go back and get a new tenant and verify it. So sometimes things will happen, but that's why we try to go fast in the beginning. One of my great friends said, if you stay ready, you don't have to get ready, right? So we're trying to prepare in advance, so if something does happen, we can still close on time. And I'll keep going until I see that mute button come off, because then I know I have another question. And feel free, guys, ask any questions. I am here for you. The pre-approval process and what the buyers needs to do, right? Stronger offers, seller takes pre-approved buyers more serious. And this is kind of something we just talked about. If you have we have what's called a level 1, a level 2, and a level 3. You want to at least be at a level 2 pre-approval. And some of my listing agents are learning what that means. Level 1 means we didn't verify anything. Level 2 means we verify your documents, we ran you through underwriting, we have an automated approval. Level 3 means we verified all your documents, income, assets. You didn't say, hey, I'm going to get a gift and we don't have it yet. So there's levels to the pre-approval. Once again, once you find the property, you have to do your home inspection and things like that. You don't want to deal with giving me tax returns and being worried that your loan can be denied, right? You don't want to have to deal with that. You want to strongly focus on, strongly focus on dealing with what happens after contract, which is home inspection, appraisal, and things like that. You want to shop in confidence. You don't want to be like, well, I'm going to pray that when I send my documents in, my approval is still the same amount that it was supposed to be, right? You want to avoid those surprises, because once again, there is a very, very strong percentage of individuals who are not owners. So when you have a great experience and you can share that with 5 people, then you encourage 5 other people to become homeowners, to build wealth for their families through home ownership. When you have a problem and you tell your friends, it scares them. It makes them not want to be a homeowner again. I don't want to go through that process. So the easier I can make it for you, the more you inspire and encourage someone else to take the same steps. So that's very important for me. Common myths about pre-approvals. I don't need a pre-approval so I find a home. Absolutely not. And what happens is that you find the home. This just happened to me, I think, a couple of days ago. You find the home. Now you need the pre-approval, right? With that pre-approval, now the client found the home. The payment's a little higher than what they want to buy. So I would have went over that with them, let them know where they stood, so they wouldn't have fell in love with the property that they didn't want to pay that high of a mortgage payment, right? Without a pre-approval, you might lose the home, because my clients, when they see the property, I'm calling the listing agent, letting them know that my clients are showing up, how fast I can close. And I do work on Saturdays and Sundays, and I would love for them to execute my offer right now. So if you working with a company or person who only works on Mondays, you're going to definitely lose to everybody that got a Natasha Robinson pre-approval, because we're trying to get that offer accepted over the weekend before those bankers come into work, right? A pre-approval guarantees my loan. A pre-approval does not guarantee your loan. Things can come up. You can get late on your credit. You can lose your job. The property can just not be the best property. You could get a garnishment a few days before. I had a person that was clear to close, lost his job. Everyone went on furlough. Literally, I would say maybe 3 days before he got the clear to close, and he didn't tell me. But what happens is we do a verification of employment 48 hours before closing. So that's how I found out, but he wasn't going to tell me. So things can happen. You always want to be honest with your loan officer, but it definitely doesn't guarantee your pre-approval. And pre-approvals do not hurt your credit, right? Like everybody's like, oh, I don't want my score to go down. So I always tell people there is a difference between consumer credit and mortgage credit. If you go to North Riverside Mall, I'm from out west, so I'm going to use the West Side Mall. But if you go to North Riverside Mall, and you go to Radio Shack, which I'm just saying because that's funny, it don't exist anymore, but I'm visualizing me going into the Riverside back in the day. But if you go to Victoria's Secret, H&M, 5 different department stores, Best Buy, Home Depot, and you purchase and you apply for credit, it is likely that you can get credit at 25 different stores on the same day, okay? If you go and apply with Guarantee Rate, Loan Depot, Chase, BMO, there is no guarantee. It is a very strong possibility that you're going to buy 4 houses in one day. Now, I've seen people try it, but it's almost impossible now because we have what's called it's a number, right? I don't want to go too high level, but it's a number that is reported every time you purchase a home. That's reported to the title companies to prevent you from being able to do that. But yes, your credit score drops when you pull it with consumer credit because they want to see what you did. They want to see if you opened 25 credit cards and they're all maxed out, because now if you had a 750, your score is going to drop down to a lower score. So they give you 30 days and they drop it down to see what is going to happen with these inquiries, and then they'll bring it back up. Mortgages are different, like I said, because they don't expect you to buy 4 homes on the same day. So just keep that in mind. And I always tell my clients, you can Google it. So that way you get your own verification. And generally they have all different things for mortgages where you could do it within 14 days, 30 days. I'm not a salesperson, so I don't know what the exact one is, but I always tell people to ask my therapist, ChatGPT, because Chat can pretty much answer a lot of questions like that. But your direct mortgage questions, you want to definitely talk to me, but you can say, hey, Chat, I want to work with Natasha Robinson, but before I do, will pulling credit hurt my score? And Chat is going to go and Google what's been Googled and probably tell you the same answer I did. So just a little facts on that. Key difference between a pre-qualification and a pre-approval, right? Sometimes they do a credit check on pre-qualifications. A lot of times they'll do a soft pull. They don't really verify documentation. The estimate isn't reliable, right? Because nothing's verified. Your offer is weak. Everybody doesn't know the difference between a pre-approval and a pre-qualification. But if you're shopping anywhere in Brunsville, North Kenwood, South Loop, downtown, those agents are very savvy. I know I've seen some agents lately that may let a pre-qualification go. But if you get a old school, really good listing agent, they're going to definitely ignore that pre-qualification, or they're going to come back and ask you for a pre-approval, right? On that pre-approval, I'm going to start with a soft pull. If you like what I'm offering you and we go into a relationship, then I will pull your credit prior to me issuing a pre-approval. Why? Because a Natasha Robinson pre-approval means that we're about to close, that I've done the due diligence, I checked your credit, and I stand on my pre-approvals, right? So that's what that means. So you want to make sure that you're in a good situation to have your offer accepted. And yes, I'm going to verify your documents. Yes, I'm going to give you a strong loan estimate, right? Yes, your offer is going to be strong. And yes, sellers most of the time do require that you have a pre-approval, especially when you're in a high bidding situation. What is a pre-approval? Which we know it's just not a pre-qualification, but basically it's a thorough review of your income, assets, debts. I am pulling those back reports. You do have to give me documents, not because I want to collect all your documents before you even find a property. It's actually a lot of work for me, guys. Like I may get, so many applications a day, but there is only a 19% because some people start the application. I have to send them to credit repair. They don't upload their documents. They don't finish the application. So with that being said, I have to go through all of these files, and the ones that we can pre-approve, we try to do them, like I said, within 1 to 4 hours to make sure that you're out there and able to search for a property fast. You'll end up with a conditional approval where you can make an offer and I can give you a fair interest rate. We do have it where we can lock in your interest rate before you go under contract to save you some time if we feel like we think interest rates are going up. So lots of things we can do in the pre-approval side, and it just shows the seller your real financial ability to purchase. The seller doesn't want a pre-approval or a pre-qualification on a property that you can't afford, and you don't either. You do not want to go and find a property and fall in love with it and you can't buy it because you didn't take 20 minutes, to an hour to do the pre-approval process correctly. Steps to apply. We talked about this earlier. W-2s. I'm just like going to court. Please only give me what I asked for, right? I don't need you to just start emailing and upload everything in your database. I need the 30 days of pay stubs. If you get bonus overtime, or if your hours change, they're not always 40, then I would like, if you can, to give the last pay stub for 23 and 24. If you can't, no worries. We'll contact your prior employer and get that. We need the last 2 years W-2s and 1 month bank statement. If you're self-employed, you'll look to my left, and then I would need your recent 2 years tax returns, a profit and loss, and 1 month bank statement. What is a profit and loss, right? So it's 2025. If you filed your 2024 and your 2023 taxes today, as of now, I do not need a profit and loss, right? But if you have 23 and 22, you didn't file 24, well, I don't know what you made in 24. So I can take a very generic January 1st to December 1st, Natasha's business, right? Profit and loss. Income, how much did you make? Expenses, how much did you spend? Profit, loss. How much did you make in 2024? And that will be signed for you. So you do not have to go to your accountant. You can go to your QuickBooks, but this is the basic documentation that we need. Now, when we run our underwriter reports and check your, the third-party verifications, if things come up like foreclosures, bankruptcies, and things like that, we will come back and ask you about them. I have a lot of clients, same name as their mom, believe it or not, this year. I had that happen several times. Same name as their dad, their junior or senior. So even though it comes up, may mean it doesn't really matter, but we still just may have some additional questions for you. No questions, Emeka? Y'all doing good. Y'all already know how to apply? Okay. Good question. So yes, when I say 2 or 3K, you say all day, because I do offer 2 or 3Ks. I also offer conventional and VA renovations. I always have to give them a shout out. But when I pre-approve you, I'm going to pre-approve you for purchase price plus renovation. So when we have our consultation, I'll ask you, because some people will apply for 200,000, but they may qualify for 400,000. So I'll say, hey, how much are you think you want to purchase the property for? How much do you think you need a rehab? Right? I had a client today, single family, 115. She wants to spend 80,000. Right? So then she needs, give or take, about 195. So about 195, right? So with that being said, we would do the pre-approval for her based on that. But say, for instance, she's like, I don't know how much I want to spend, but I think I'm going to offer around 100 to 150. I would give her a pre-approval for 150 and just max out her renovation. But your pre-approval on a renovation looks a little different, because I'm giving you purchase price plus renovation. And yes, it's